गुड इवनिंग एवरीवन। कैसे हैं आप सब? So, second session with chapter 9. How should we start today? I need to know. All of you are here with me. Don't be late. मैं teams बना दूंगा, फिर you'll be left out. Chapter 9, Audit of Items of Financial Statements. Oh, wow. Okay. Mr. Bandreddy is sending some emojis as well, and I'm not able to understand what this emoji is, but still, good evening. Hitesh, Bandreddy, Nilabju, Himanshu, Aditi, Karthik, Purnima, Annie, Mehdi, Siddharth, Kaveri, Hitesh. Hitesh is again. Okay. Okay. So, assertions and everything, I hope you all have read it from the study mat as well and acquainted yourselves about what are assertions, how do we apply them, occurrence, existence, completeness, valuation, measurement, disclosures. We are going to apply what we understood in the last session on the items of profit and loss today. We'll be finishing with it with profit and loss. Ben Reddy says today no groups, only solo. Sorry, Ben Reddy, we will play only in groups, no solo. What is the? I know it is quite difficult. You people don't know about each other, but still, we can play an activity in groups as well. It's called learning with fun, and team activities are always fun. So just support each other, even though you don't know about each other. Still. Shri Ram, Bhakti, Shruti, oh, many more people today. Hiral, Kushbu. Hiral, you were not there in the last session, right? Kushbu, Shreya, Hiral was there with us in chapter 6. Gehani, Bindu, Surya, Sonika. Okay. So, profit and loss items, sales, indirect incomes, purchases, indirect expenses. This is what we are going to do today, and we'll be just taking the help of our accounting knowledge as well, because this is what we actually perform in our day-to-day audit. I still remember Karthik, time-based evaluations नहीं होगी आज. I agree. Network and time differs with network. No time-based evaluations today. Individual evaluations summed up in group. Fine. And Siddharth, right. Yes, Shriram, yes, you are completely right. Mark's total score will be revealed at the last. We'll maintain it as a suspense, and let's see how many people do pay attention during the class as well, and how many actually participate. So let's discuss some general queries, and then we'll form groups only in the beginning. And those groups will prevail throughout the session and will reveal scores at the last. Okay, so during the class itself, I'll be asking various questions, and let's see which group wins today at the last. So there is no disruption during the session. And to remind you, in the next session, we'll be finishing with one part two parts. Part 1 general and part 2 statement of profit and loss today. In the next class, we will have a test. It's quite difficult to take tests via this means, but let it be. We'll have a test and that test will be individual. I'll be asking for scores which everyone gets. So the next 15 to 20 minutes of our next session, after today's session, we have a session on Wednesday, 17th. You'll have 3 days in between, and you'll have to prepare what we have studied in the 2 sessions. On the basis of that, we'll have tests for 15 minutes, and for other 15 minutes, I'll be discussing some previous year questions with you from this chapter. I think Aditi asked me in the last class that how do we answer in the exam and how do questions come in the exam from lines from the chapter or some conceptual questions. So I'll be taking up some questions of the previous examinations and we'll discuss those questions. What is the question actually asking and how do we have to answer that question? Whether it is a case study or it is a descriptive question or it is a correct and incorrect. Okay. Sometimes what happens is the question is asking something different and we fly to a different tangent. We just touch the required answer and just fly away. So this is what we have to improve and we'll improve it along with our sessions. Okay. So, right, Ben, ready? Yes, Karthik. I'll preferably develop a mechanism, whatever be the mechanism, either a Google form or whatsoever. So I'll see what we can do. We'll be having 2 to 3 tests in this chapter, at least 2, if not 3, at least 2, and we shall see what all mechanisms we can use. In the last session, we did a different kind of activity. Today, we are going to modify that activity. In the next session, we'll again update our activity with a new approach. So we'll be following various approaches because with one approach, the situation gets monotonous, and I don't want that for you as well as for myself. So we'll be using different approaches for each and every kind of evaluation, whether it is an activity or a test. Okay. Chaliye. So any queries from the previous session, please? We did the basics, financial statements audit, about standards, and then profit and loss assertions, and then we did some general considerations with respect to SA 315, knowing about the organization and the internal controls of the organization with respect to revenue part. Now, today we will start with applying the assertions on the revenue item. So any queries from the last session? Okay, let us first finish the previous part of sales. Fine. When we get on to expenses, then we'll make teams. Okay, team A, team B, team C, whatever it is. We'll make teams and then the expenses part, we'll do it along with the activity. Fine. So let us start with the revenue part. Here we go. Khushi is asking, as auditor, should not use same plan for every. Yes. Acha, you are telling me. Okay. Yeah. Okay. Chaliye. So I think we did the sales revenue cycle during the last session. What is the revenue cycle? Right? What is it? So before we start with the assertion on sales, just give me some hints. Shriram, I'll be uploading it by today. The MCQs and the case scenarios, whatever practice you people require, I'll be uploading it within a day, either tonight or tomorrow. Right? I just wanted one part to finish only then. Okay, so revenue cycles. What could be the points of assertion in sales? Come on, tell me. You have read occurrence, completeness, measurement, disclosure. So give me some points with respect to sales. Come on. Cash paid. Oh, cash paid. That was it. That is cash received. Okay. Cash sales. That is one point of internal control and checking of sales. What about else? What about others? We did the revenue cycle. We purchase stock. We sell it to the customer. Customer gives us cash. Debtors, or you say receivables, get involved. Just imagine the whole process. Shamji should be there in your mind. Tea and Cookies Private Limited. So here is Tea and Cookies Private Limited company. I am entering this company. The company's showroom. So I am approaching the reception and I'm asking, I want to purchase chocolate cookies. That is what my requirement. The receptionist hands me a token. Sir, here is your token. I have paid the money. Now I approach the cookies counter. I've approached the cookies counter and I give them the token. They say, please wait, sir. We'll be packing with your order. We'll be just back with your order. They pack it and they give it to me. My packed cookies. Okay. And along with the token, I've also got an invoice. Then I exit the shop. I exit the shop. There is a guard over here. Sir, can I please see your shopping bag? Sure. He'll check the invoice. He'll put his stamp on it. And then he'll check my bag. Is it everything over there as per the invoice? And he'll let me out. This is the process of how I make a sale. So what are the points of consideration over here? You'll have to tell me what are the points of consideration over here. Yes. Recorded sales were way to valid customers. Okay. Valid as in there were no fictitious customers. ऐसा customer जो exist ही नहीं करता. Some person by the name of A, sales have been made to him, but there is no person that says A. To inflate the sales, to show higher sales. To show higher sales than actual. So what should be the point of concern? Sales have been made to valid customers. Nilabjo, okay. Sales must occur in the accounting year, obviously. So there would be sales if we are auditing the previous year 21-22. There should be no sales which have been made in April 22 belonging to next year or March 21 belonging to previous year. Only for this year. Sales amount, yes, very much important. Sales amount. What is the amount? Value, discount, if any, taxes, total invoice value. What is it? Very good. Akash Nil, very good. Gyani. Then check, Siddharth says check inventories. In the case of sales, right, inventories is basically a matter of asset. So just with respect to sales transaction, yeah, you can check, you can match the sales with the outwards in inventories. Definitely. Yes, then no Khushi, very good. There should be no double recording. There should be no double recording. I mean, say duplicate invoices. I was once auditing the books of a client, and what I found was an entry has been recorded twice. Now, I could have easily skipped it because, as per me, there could be two entries of same amounts. It is quite possible. But when I checked the narration, there was a draft or a check number. And for both the entries, the draft or check number was the same. It was a duplicate entry punched into the accounting system twice. And I got it corrected by the account staff of that organization. So this is what duplication, how is it could have been an error as well. It could have been an error as well. But we should check for duplicate invoices. Okay, good, Khushi. Check debtors. Yes, Siddharth, we have to check debtors because they are directly related with credit sales. The credit sales accounted for in the financial statements, they have a direct relation with the debtors. Numbered invoices, good, Aditi. Numbered invoices, very good. If any invoices are missing, that should be checked. Then trade receivables, credit and credit differently. Okay. Yes, just like the DMart guard checks. Shriram say order received. That is the cycle. Okay, segregation of duties. Yes. Good. No inflated sales like Satyam. Yeah. Along with your answer, you are taking upon the satire as well. Okay. Yes, Ben Reddy. Credit limit. Aditi, good. No omission of sales. Yes, good, Bindu. Discount of sales and properly adjusted and sequence of invoicing. C. So we all know about this. Now, this is the khichdi which you have prepared. We have prepared. ये लग रही है ना खिचड़ी? This is a khichdi. We all know about it. It is a khichdi in our brain that yes, sales का ऐसे होना चाहिए, वैसे होना चाहिए, ये भी होना चाहिए, वो भी होना चाहिए. And when it comes to exams, what do? We are not able to separate or segregate our answers from this khichdi onto the answer sheet. This is the problem with many of the students. They know everything. They've read everything, but they're not able to separate the answer from this khichdi. And the student who knows this art cracks the exam. So out of this khichdi, we have to segregate the points into occurrence, completeness, measurement, presentation, and disclosure. All the profit and loss items related to sales. Right? Yes, Pooja, sales returns. Very good point. Himanshu, goods returned. Good, Khushbu, adequate provision for bad debt. That will be due in expenses. Good, Isha. Goods shipped without customer consent. Very good. This is also a point. No, khichdi not has to be presented and disclosed properly. Out of this khichdi, this is something which is quite infeasible, but the student who knows this art, that out of this khichdi, what and in what do we require and in what proportion we have to write the answer. The right quantity and the quality of the answer. Okay. So let's segregate this khichdi. Whatever you guys have told me and I have written on screen, let's segregate this khichdi into various parts of sales auditing. Let's move. Don't present the khichdi, Siddharth, okay? Here we come to the audit procedures. Sale of products and services. And here we go. So, yes, ensure that revenue is not overstated or even understated by performing following audit procedures. The first assertion is occurrence. What did occurrence mean? Recorded sales. Recorded sales means sales which are there in the books of account. Those are recorded sales. Represents goods shipped, services performed during the period. If it is a service industry organization, services have actually been performed for which you can account for your revenue. And goods have actually been shipped or sales has been made. So what do we need to check? देखो जो आप लोगों ने बताया था, whatever you guys told me, you will find all your points over here. First point, check whether a single sales invoice is recorded twice. Someone told me this point. A single sales required, if it is recorded twice, get the duplicate invoice eliminated from the system. And if it is also there in duplicate, physical, check for it. How can a physical invoice be generated in duplicate? It is not possible. And if it is an accounting entry in the e-system, computer system, get the duplicate invoice eliminated, because it is not at all feasible that you are making sales with the same number of invoice and the sales get inflated. Inflated sales obviously would result in inflated profit, and it is like a window dressing of the financial statements. Or cancelled sales invoice could also be recorded. If an invoice of sales has been cancelled, but it is still there in the system, it has to be eliminated. Next point. Test check few. Test check, auditor resorts to test checking, sampling. Test check few invoices with the relevant entries in the sales journal. A, B, C, D, every 5th invoice, every 10th invoice, or invoices greater than, you can say, 50,000 as per the total revenue percentage, greater than 5% of the revenue, 10% of the revenue, total sales, right? For example, we have this. Okay. So, right, we had this one. 6 crore 60 lakhs 8,106. This was the sales of Tea and Cookies Limited. So I'll say I'll check for inventories 10%. Sales 6 crores 10%, 66 lakhs. So there is high probability there would not be an invoice of 66 lakhs. Let us come to, I'll check 6 crores 60 lakhs turnover. I'll check, test checks few invoices which are greater than 60,000 in amount, greater than 66,000 in amount. So I'll take out some invoices and check their entries with the sales journal. Will tally them with the sales journal. It's quite possible. As an auditor, I can ask for that. Okay. Then obtain confirmation from few customers who ensure genuineness of sales transactions. Randomly select some prominent customers of the organization. External confirmations, you have a standard of auditing on that as well. External confirmations from the customer to check whether this customer actually exists or not. As somebody told me, fictitious sales. Okay. Then whether any fictitious customers and sales have been recorded, like Binami sales. Binami property, aapne suna hoga, Binami sales. XYZ, any person cash sales. If they can actually justify the sales transaction, see, we have made a cash entry. 20,000 cash sales, 30,000 cash sales, retail, sale. This is something which is quite tedious and tough to check for fictitious customers, but some audit tests will definitely let you find the fictitious customers. There will definitely some hint you will get that this sale is not proper. It could be you could tally it with the GST returns. You'll get to know. You will see some trend analysis. In the last year at this month, the sales have jumped to a great extent. What could be the reason for that jump? If the reason is justified, it's fine. Otherwise, there is high tendency that some fictitious sales have been recorded in the last quarter uniformly so that they could show inflated sales. Yes, Hiral, you can apply analytical procedures. Whether any shipments were done without the consent of the customer. Customer says, we will tell you in the first week of April whether we want this consignment or not. Whether our sales agreement would come into place or not. We'll affect the sales agreement in the first week of April. Just give us 1 week's time. And we are standing on 30th March. And what do? We dispatch the goods. We said, no problem. Goods will get returned. It's fine. Let us show some sales. Especially at the year end to inflate sales. Now, I told you the relation between sales and profit in the previous session to show high profits. Whether unearned revenue recorded as earned. There are some goods in the chapter of final accounts you did. Stock lying with customers. You'll always show it that it is a stock with customer. It is a part of the closing stock. It can never be part of sales. You remember while solving the question of final accounts, we'll get this adjustment. Out of rupees 10,000, 5,000 stock was lying with the customer. You'll separate it from the sales because the sales has not affected yet. This is an answer to your question, Karthik. How to understand revenue will be checked in occurrence? It seems somewhere related to no occurrence. Whether actually the sales have taken place or not. Completeness is whatever sales are recorded, they have been recorded properly at the proper value. All sales have been recorded. Okay. Here it depends upon the length of the marks. The marks asked for the question. For example, if they are asking you about sales, right? With respect to specific assertion, it is quite tedious. So we'll see for the questions. Just understand the concept first, then we'll see the questions. How do the questions come and how to answer those questions? It's my humble submission that we first understand the concept clearly. Okay. So stock lying with customer was a part of our closing stock, which is with the customer. So revenue on that, margin on that has not been earned yet. It has not been put into sales yet. So any unearned revenue should not be recorded as earned, means it should not form a part of the sales. Whether any substantial uncertainty exists about collectability. We have made sales to a person who has not paid into his account since the past 1 year. How are we making sales to him? And why are we? What is the reason? Is the reason justified? Shamji and companies are Tea and Cookies Private Limited. They are sending packs of cookies to another ABC company. In the past 1 year, there is no movement in their account, no amount received. So there is some uncertainty whether they'll pay the money or not. Whether customer obligations are contingent on other actions. So customer obligations are contingent on other exceptions. For example, financing, resale, what it could be? Let it be. Financing is related to service industry, resale. I'll take you the example of resale. Like, for example, we have an agreement. We are a distributor. We have an agreement with the person further in the chain that all the products sold will form a part of their purchase and our sale, and unsold products will be returned back to the company. Or the products which were not sold during their durability period, or you can say like they have an expiry period. Tea and Cookies Private Limited will always sell the edible items. Edible items have an expiry date, so they usually have a term in their TNC that unsold items which are nearing to expiry date or after the expiry date will be taken back by the company. So if customer obligations are contingent on other actions that we should take care of. Review sequence of sales invoices. Yes. Very much important, quite normal point. You people only told me 1, 2, 3, 4, 5, then 8. Where are 6 and 7? What happened to 6 and 7? If they form a part of the cancelled invoices, shows the cancelled invoices. Are 6 and 7 there? This is what an auditor has to check. Review journal entries for unusual transactions. Out of the 6 crore sales, some 1 crore sales have been made on a single invoice at year end. Some 1 crore sales have been made on a single invoice at year end, March. I find this transaction somewhere unusual. 1/6, 1 crore sales in March. A big contract did the company get? I'll delve into this transaction, into the depth of this transaction. I want to know about this invoice. 1 crore. Did the goods actually get dispatched? Who was the customer? What was the immediate requirement of such a big order? I'll check each and everything. Calculate the ratio of sales return to sales and compare it with previous year and inquire for the reasons of increase or decrease, but obvious. If the sales return is higher than the previous year, that means Tea and Cookies Private Limited is compromising on the quality part, or there is some miscommunication with the customers. That is why the sales return is higher. And the management, Mr. Shamji, he needs to know about it. Before he says, "Ika ho gaya." Right? Check the sales return with sales invoice, challan, credit note. Will come to what is a credit note, and stock register. Stock inwards, stock outwards. When the sales were made, affected, there should be a stock outwards entry in the stock register. And when the sales return was made by the customer, there should be inwards entry, properly recorded with the stock, tally with the stock register. So these are the points related to occurrence. Okay. So I'm taking each and every point of sales in detail, because purchases, expenses, they are just repetitions with respect to their condition. In purchases, you will find debit note against credit note, purchase invoice against sales invoice. So every point, fictitious customers ke jagah you will find fictitious vendors. So we are doing this in detail with the sales so that we don't have to get with each and every point in the case of purchases. This is occurrence. Completeness now. Okay. Assertion number 2, completeness. All sales made during the period under audit were recorded, and there is no understatement or overstatement. Understatement is omission, errors of omission, sales invoices omitted to be entered. Overstatement, sales are inflated, some fictitious invoices have been entered. Jitne the wo to डाले और extra डाल दिए just to inflate the sales. So yes, what are the audit procedures for that? Perform cut-off procedures to ensure that revenues are recognized in the current accounting period and sales were not tempered towards the period end window dressing. We have to check using cutoff procedures. What could be our cutoff procedures? Checking the sales with the previous year, some extra invoices to be checked during the period end, quarter end, what kind of sales were made, checking the genuineness of the transactions, that revenues recognized in the current accounting period belong to the previous year only. Some sales which have been effected in the month of April after the end of the financial year, they have not been adjusted somehow in the previous year. So during our cutoff procedures, what kind of errors could we get? Cutoff errors will usually arise when companies recognize revenue based on the date on which sales invoices are generated rather than the date on which the risks and rewards are transferred to the buyer. Okay, tell me when the risk and rewards get transferred to the buyer. Come on. When do the risks and rewards get transferred to the buyer? You all have read Sales of Goods Act? Yes, please. Tell me, when do the risks and rewards get transferred to the buyer? Delivery, ownership gets transferred. Ownership gets transferred, delivery, and all the risks and rewards get transferred to the buyer. So we have to check. It is not only that you have generated the invoice on 30th March, but the goods are being dispatched to the customer on 15th of April, and you say, yes, we have made the sales. Stock is with you. You have not received any payment. You have just generated the invoice. And not at all it satisfies the conditions of sale. So you'll get to see such transactions, especially at the year end, and you'll have to audit such transactions and discuss with the management. I'll come to your point, Aditi. Okay. Auditors should also verify the credit notes issued after the accounting period. When the accounting period ends, sometimes sales team or sales personnel can make fictitious sales before the year end to meet performance target. So big company, Shamji has given targets to their north, south, east, west customers. The zone which will be making the maximum sales will reward them with paid leaves, holiday. And you'll have to check to just get lured by this performance targets, bonuses, incentives. Sometimes the people from the sales team, they enter fictitious sales. Before year end, they achieve their target for the year, and in the first or second week of April, they issue a credit note to the customers. So what will you have to check? You will have to check, is the issue of credit notes a healthy practice with that customer or with the Tea and Cookies Private Limited? If you find anything unusual about the issue of credit note, you should get to understand that what was the reason behind the issuance of that credit note. What is the credit note actually? What is the credit note? Here we go. You have the sample of a credit note over here with us. Okay. So a credit note is a commercial document issued by the seller to the buyer. So person from the sales team representing Tea and Cookies Private Limited will issue it to the buyer. It acts as a source document for the sales return journal. It is basically either a sales return. What do they say? They say, okay, fine. Out of 10,000, you want to return us 2,000 valued stock. Stock valuing 10,000 was sent to you. You want to return us the stock of the value of rupees 2,000. Okay, return to us. Will not issue you the payment. Will not give you the money back. Will issue you a credit note. What is a credit note? Basically, we acknowledge that we owe you rupees 2,000. And we will adjust this 2,000 against the deals to follow between us. The next time we make a sale to you of 20,000, you will just have to pay us 18,000. We will adjust the 2,000 in that transaction. That is the purpose of a credit note. Credit notes can be set off in business transactions in a variety of ways. I'm just telling you the most common or generalized manner. In other words, the credit note is evidence of the reduction in sale. After the supplier's issue of the tax invoice, if there is any reduction in the taxable value of the goods supplied, he may issue a credit note mentioning the prescribed particulars. For example, if there is a change in GST rate around April 1, there is a change in the price of goods at the beginning of the year or between the sale and the generation of invoice. It could be any situation. There could be a reduction or an increase in the prices of goods sold. And this credit note cannot be issued to a retail customer. It is not a practice. Retail customer is, I am going to Tea and Cookies Private Limited to purchase a pack of chocolate cookies of 20 rupees. And another day comes that the GST has increased. You bought from us 20 rupees packet, give us the extra 5 rupees. Today the rate is 25 rupees. Not to the retail customer, not to the end user, but business to business. From the company to another business who further sells it to end users because they have a running account with each other. By issuing a credit note, the seller promises to pay back the reduced amount or adjust it in the subsequent transaction. For example, if a product originally priced at rupees 100 is incorrectly invoiced at rupees 150, then a credit note of rupees 50 will be issued by the vendor. There could be some clerical error as well. The product was rupees 100, but we issued an invoice of rupees 150 to our business customer. So you say, okay, fine, we'll not return you rupees 50. Let us allow you to give a credit note of rupees 50, like the coupons you get at departmental stores and where they don't return the money, but they give you a coupon. During the next purchase, you can use this coupon against any item of 50 rupees or against your total bill. Completely fine. That retail customers get coupons. Business customers in the chain get credit notes. Karthik, in GST, there are 3 conditions. The 2 of them need to be met. Not only raising of invoice, there is another condition as well with respect to a transaction to be termed as sales. Okay. It is not possible, Siddharth. You have all right to check the books of at least the next 3 months of the first quarter after the year ends. You'll have to check for if any credit notes have been issued, whether those credit notes have been deducted from the previous year sales or not. If you made a sales in the month of March of 1 lakh rupees and subsequently in the month of April you raise a credit note of 1 lakh rupees, that is basically a sales return. It could be a window dressing item. So that credit note, particularly if it is against the sales of the previous year, it has to be adjusted in the books of that year only. You cannot carry it further to next year. Sales is in the previous year and credit note is in the next year. The previous year sales are inflated, the current year sales are deflated. This cannot happen. Right? You have, Siddharth, you have all right to the books of accounts of the next year as well, as far as you want to check any transactions related to previous year. Pooja, actually they don't do it. They inflate the sales. They think that the auditor will not check the, as Siddharth said, the sales journal of April, May or June. And further on in the next year, we will adjust it against any other transaction, the credit note or the sales return. We'll make it a part of next year, and this chain continues year by year, just to show inflated sales. Okay. I hope that is fine with the credit note. The credit note part is a bit tricky. You should understand it just because you'll find it in GST as well. Then trace from the shipping documents to the sales journal. Shipping documents is, what is a shipping document? You give away shipping document to the goods department, storage department. It could be the stores keeper, that these goods have to be shipped to this particular customer. Check some shipping documents, tally them with the invoices raised, whether they match or not. Tea and Cookies Limited, Private Limited had to send 200 boxes of honey oat cookies, but only 190 boxes were sent. If 190 boxes were sent only, how could they record the sales of for 200 boxes as per the invoice generated? Why not the 10 boxes were physically sent? What is the position of that 10 boxes? Because those 10 boxes, if not sent to the customer, they are still lying in the stock. How can they form part of the sales if they are a part of the closing stock? So you can check it with the shipping documents as well. I think consignment is a completely different thing. Consignment ke andar bhi, if sales have been recorded, right? So you can record it at your end as well. In the year end, you do tally with your consignee. Right? The consignee sells you memorandum, right? You do tally it with your consignee. So those are goods lying with the consignee. Yes, Siddharth, like bill of lading. Check whether quantity appearing in sales register or not, and check reconciliation of total sales, goods dispatched as per stock records and financial records and statutory records like GST. So you check it with GST returns, the sales. In the GST returns of Tea and Cookies Private Limited, the sales are showing 6 crores 10,000. But with us, in the financial statements, they are showing 6 crores 6,000. Or 6 crores 6 lakh, 6 crores 10 lakh. There's a difference of 4 lakhs. Why are the sales shown more in GST returns by rupees 4 lakhs? What could be the reason for this deviation? If any adjustment is required in the GST returns, the auditor should be made known of this fact. उसे बताना पड़ेगा. Yes, we made an error while filing GST returns. and we will update our GST returns in the coming year as per the process of GST return filing. I'll ask for a reconciliation. Okay, give me the reconciliation of your books with your GST returns. I need to be well versed that yes, this is the reason for that difference, and you agree to it. I'll take a management representation. Yes, this is a difference, and the management has told me get it signed. Review GST text and GST returns and ensure that same are reconciled with revenue reported in profit and loss account. Verify reasonability of GST by applying the applicable rate to the gross sales value and the compare of amount of GST as per statutory returns and analyze the reasons for variance, if any. If you'll check out, suppose Tea and Cookies Private Limited are selling a product. Obviously, if it is such a big company and the products are not uniform, they'll be having different slab rates of GST, 5, 12, 18. And it will be quite difficult for you to check each and every item, but you can always ask for a summary. 5% items this much, 10% this much, 12% this much, 18% this much. Total them. It matches with the GST returns. Now come to the tax part. 5% this much tax, 12% this much tax, 18% this much tax. How much tax was paid by the company during the previous year? This GST. Does it match? Does it commensurate? You read about corroborative evidence. I hope you read about this word in your chapter of audit sampling. Corroborative evidence. So does it match with the sales shown? You are sorted. So this is regarding the completeness. There should not be overstated sales, inflated sales. There should not be deflated sales. Measurement. What is measurement? All sales are accurately measured as per applicable accounting standards and correctly journalized, summarized, and posted. Correctly journalized. Why are they writing this correctly journalized? Sales journal है. Sales डाली, पार्टी का नाम डाला या कैश डाला, double entry done. ABC account debited to sales, cash account debited to sales. What could be the error in journalizing the sales? Taxes, discounts, whether a proper journal entry has been recorded or not. Although we are using computer systems, but who is entering the journal entry in that system? Humans. Manual errors. So properly generalized, summarized, and posted. Discount gets into discount account. Cash, debit, debtors. Okay. What procedures? Trace a few transactions from inception to completion. Examination in depth, walkthrough. I'll sit with the accountant. I'll say, or I'll just create an entry. What would I do? If I'm auditing the books of Tea and Cookies Private Limited, I say, okay, Shyamji, let me check it on myself. You stay in your room, cabin, and let me check it from inception to completion. So what do? I go to the counter. I said, give me a pack of chocolate cookies. And give me an invoice. Sir, क्या कर रहे हैं आप? सर, आप हमारे ऑडिटर हैं. हम आपसे पैसे कैसे ले सकते हैं? मैं बोलूँगा ऐसे क्यों नहीं ले सकते भाई? सर, मैं ऑडिटर हूँ still. I should not get disqualified if I owe you money. So you have to take money. और मेरा examination in depth खराब हो रहा है. Let me complete the examination in depth. Let me complete the walkthrough. Give me the token and the invoice. I'll go to the counter. I'll get the cookies. Then I'll move out and then come to Shyamji or the accountant. how is he getting? Next day, I'll go to the shop again, sit with Samji, have a cup of tea, and then I'll go to the accountant. Yesterday, I purchased this particular pack of cookies. I have this invoice. Show me. How have you entered it in the books? How has the discount been entered? How is the invoice value? And what document did you get to record such entry? Did you get a copy of the invoice? He says, yes, I got a copy of the invoice from the billing section. Yesterday's whole day invoices were sent to me at night, and it's since morning I'm entering all the data into the accounting system. So show me, where is my bill? Yes, sir, here it is. Here, see, I have entered the entry. Show me, how have you entered? You have credited sales, you have debited cash, you have debited discount. Yeah, I can see on the invoice I got 10% discount. And the GST you have charged me, okay, you have taken it to the GST column. Fine. Checked it. Yes, Prabhas. Very good. Sales of fixed asset could be recorded in sales. You have sold a fixed asset. How can you record it in sales? Completely. This will inflate the sales to a great extent. Take few sales transaction and check from the receipt of sales order. Right? Sales order, which they gave yesterday, to the payment of residual balance, every underlying document, it could be invoice, it could be a check, to ensure if it is properly recorded at every stage and measured accurately, taking into consideration all the incentives, discounts, if any. The recognition shall be according to the revenue recognition policy of the entity. AS9, revenue recognition, you have done that. And Nilabjo is also telling me, sir, AS9. I bought some cookies for you, Bandreddy. I bought some. If the client is engaged in export sales, obviously you will check all the compliances with respect to AS11. Auditor must understand that client's operations and related standard issues, generally accepted accounting principles. Examples, the point of sale, revenue recognition versus percentage of completion, contract accounts, contractors. What is the percentage of completion of the task you have taken up? And how are you recognizing the revenue in your books of accounts? Percentage completion method, estimation method, different methods of, you might have read about it in your AS of construction contracts. It is not there, Abhi. It is not there, Abhi, but yet in costing, I might have read about it. Contract accounting. I suppose almost every student is done with group 1. So in costing, you might have read about it. Compare the rate of sales affected with related parties and review them for collectability as well as whether they were properly authorized and the value of such transactions were reasonable and at arm's length. Okay, what is it? With related party. With related party. Okay, just tell me. So what happens is, there was this pack, there was this gift pack. Okay, there was this gift pack. It had 6 types of cookies. I'm very fond of cookies. That is why I have to take cookies for every example. Please bear with me. So cookies pack, chocolate, honey, almond, right? Vanilla, strawberry, whatsoever. And fine. So There are related parties. Related parties could be to Shyamji, Shyamji's son, Shyamji's suppose brother. Fine. They come to the shop, they take it and go away. No one asks them anything. Do they generate invoices? No. They might generate, but what about these invoices? They would be charged to the account of Shyamji. Shyamji would say, okay, if anybody from my family comes to the shop and they purchase cookies, they would be charged to my account as per the policy decided by the board. Shyamji, we will deduct it from the director's remuneration. Okay, Shyamji, this is something which is a perquisite because you are the founding director of this company. Completely different treatment. But what happens if there is a shop of Shyamji's brother or brother-in-law? And such gift packs have been sold to them under a trade agreement. Okay? Material sales means almost 20% of the sales have been sold to Shyamji's brother, and he further sells it to retail customers. And this particular brother has been given 30% discount against the 20% discount given to other business customers. Other business customers get 20% discount on this gift pack item. They also further sell it in retail, but Shyamji's brother gets 30% discount on every lot. So if the board has passed any such resolution that it is fine if the relatives can get higher discount, is there a policy in the company? What does it say? It says compare the rate of sales effected with related parties and review them for collectability, whether the sales would be collected or not, as well as whether they were properly authorized. Authorization comes from the board resolution with respect to relative sales, and what is the value of such transactions, what the reasonable and at arm's length. It should not be the case that 30% or 40% of the sales are being made to Shyamji's brother and they are all being made at 50% discount. How is the company going to benefit from that? If you want to sell, you can sell, okay, it's fine, 3 or 4 occasions. But if you are getting a better rate in the market by offering 20% discount, you are getting customers in the market. Why are you hell-bent upon selling the cookies to your brother only at 30% discount? Ghate ka sauda, that is a loss agreement. Obviously, the government would be interested in that. If you sell this to the outside customer, you have to give 20% discount. That means higher sales, higher profits. Why are you selling it to your brother? And considerate sales. 3 to 4 occasions is fine, but is there an agreement? Is it properly authorized? Everything needs to be checked as far as it is a case of related parties. Yes, AS18. Yes, Siddharth. Drawings in the case of a proprietor, but in the case of a company, the directors have an agreement. Yes. Hiral is asking, what is the meaning of arm's length? Okay. So what is the meaning of arm's length? Hiral, suppose you go out in the market and you go out with your sibling, your brother or your sister. Okay. So you'll sit on one table or you'll sit all together, right? What do we do? Even if we are going with our sister, mother, father, we can walk hand in hand. When we used to be kids, they'll just hold our hands so that we don't get lost. We can eat in one plate. But do we do that with a stranger? Okay, I'm going to a restaurant and sitting on a table and asking a stranger on the table, come sit, eat with me. Let's walk hand in hand. No, what do we tell them? Don't come close, maintain some distance, maintain 1 feet distance or maintain and arm's length. During the PT period or exercise period, we were made to stand taking 1 arm's length, stand in a queue with 1 arm's distance. So in the language of law, they have included it at arm's length price. Arm's length price is the price at which you are selling your goods to a stranger, unrelated party. Are you doing the same with your related party if it is a trading transaction? I'm not talking about personal transactions. If it is drawings, if it is being charged to our account, that is completely fine. But if it is a trading entry, like people purchase stocks in the market and employees of the company get ESOPs in the same way. So the strangers have been termed as that we sell them at arm's length price. That is arm's length price. Yes, SA 515, AS 18. Yes, Prabhas. And when it comes to transaction with related parties in audit exam, you get a question on that. Use SA 550, use AS 18, both. This will give strength to your answer and your answer will be of good quality. It will fetch you good marks. Yes, Siddharth, social distance. It's fine, social distancing. Okay. Presentation and disclosure. Required disclosures for sales have been appropriately made. What could be those disclosures? In respect of each class of goods has been made. Sale of tea, sale of cookies, if required, you have to make it. Whether revenue from operations is disclosed separately in the notes, sale of products, sale of services, other operating revenues. Okay. Right. I hope you all can see this. The notes of Tea and Cookies Private Limited. See, sale of goods. There was no sale of services, only sale of goods. There is no discount given during the year. No discount. Sale of services. The figures are in thousands. That's why you read it as 66,000, but it is again 6 crores. So this is how the disclosures have to be given. They can be in detail as well. Okay? Chaliye. Whether brokerage and discount on sales other than usual trade discount has been disclosed. Separate items. If you have given commission on sales, discount on sales, separate item. Whether the transactions with related parties are appropriately disclosed in notes to accounts. You have to tell nowhere in the profit and loss. No, profit and loss has got a separate format, a fixed format. Whatever you want to give something extra, you have to give it in notes to accounts. And notes to accounts want the requirements of AS 18 and SA 550. How much sales were made to the related parties with names and amount, you have to tell them in the notes to accounts. Yes, AS 18 related party disclosures, right? Okay. So that was all about sale of products and services. I hope sales is clear. Everyone. 6,60,60,8,106 हमने चेक कर लिया. We have checked 6,60,08,106. and we have noted down our observations and we'll discuss it with the management headed by Shyamji, Tea and Cookies Private Limited. Now we are moving to the indirect incomes, discount, interest, rent. 5,692 रुपए, 5,692 का डिस्काउंट, 4,48,670 रुपीज की इंटरेस्ट इनकम आई है इस कंपनी को. इंटरेस्ट किससे हो सकता है? रेंट 1,80,000, ये तो हमने बताया ही था. आई टोल्ड यू रेंट. व्हाट इज द रेंट? Shyamji's old associate. Shyamji has told him, I want this tea making to continue. I started from this ground only. So I'll handling over this business to you near the company premises or within the company premises, a small room or cabin where you'll be selling tea using machines or whatsoever. And I'll be charging nominal discount. The company will be charging nominal rent, not discount. And that rent is 1,80,000. What could be the interest income from? 4,48,670. What could be the interest income from? Interest kahan se aa sakta hai? Okay, tell me. Okay, yes, Himanshu, good. The company could have invested in bonds or fixed deposits, saving accounts, whatsoever. A company can't have a saving account. Right? So it could be from the fixed deposits, from bonds, loans and advances. Yes, Ben Reddy. Very good. Interest from late payments, trading interest. It could be that as well. Okay. Chaliye. How do we audit them? See, we have completed revenue from operations, 6 crores wala part, which was here, sale of goods and services. There were no services. We have completed this part. Now we come to another note, other income. This will complete our revenue. This is somewhere around 63 lakhs. Or I suppose it is, no, 6 lakhs. Other income is 6 lakhs, not 63, 6 lakhs, right? So what is in another income? We read 1,80,000 rent, 5,000 discount, and 4,48,000 was interest. Total 6,34,000. This is how we have done it. Detailed reporting in notes. Here only consolidate figure in the format as fixed by Companies Act. And this is what? Notes. Notes to accounts. We have segregated it over here. What comes under? And we can also segregate it over here as well. Here also we can say tea, cookies, other confectionery, right? We can segregate them over here as well. That Accounts Department of Tea and Cookies Private Limited has not done that, but it can be done over here. So what is other income? Yes, company can have a current account, not a saving account. Saving account is meant for individual and HF only. Kushbu, market price is only arm's length price. Market price and arm's length price are one and the same. Arm's length price is the justified price, feasible price. Available free market, open market price is the arm's length price. There is no difference between market price and arm's length price. The difference is between arm's length price and the price you charge to your customers, your relatives, for selling them anything. So the preferential price you charge your relatives and the arm's length price, what is the variation in that? If it is a justified variation of 10%, 15%, it's fine. But if the variation is somewhere around 50%, 60%, then you have to ask and report it about it. Any form of income earned by an entity which is not linked to the entity's core business Renting count is not the business of Tea and Cookies Private Limited. Investing in fixed deposit is not the business of Tea and Cookies Private Limited. It is classified as other income. Example, interest in fixed deposit with banks, interest on loan given to third parties, mutual fund investments. These are all other incomes. Interest income on fixed deposit is recognized on a time proportion basis, but obvious, whatever falls in that, whatever portion of interest you have earned in that particular year, which is under audit, for which financial statements have been prepared, that should be always there in the profit and loss, not relating to the next period or next year. At the applicable interest rate. So देखिए यहाँ पे cut off आ गया, time proportion basis. I got the cut off for interest assertion, and applicable interest I got the measurement assertion. When I read interest income, I'm just connecting it to the assertions. दिमाग में घूम रही मेरी assertions. When I read time proportion, even Karthik asked me in the last session, sir ये hints दीजिए कैसे पता लगेगा? Hints मिल गए? You got the hints? When they talked about time proportion, cut off, applicable interest rate, measurement. Dividends are recognized in the statement of profit and loss only when the entity's right to receive payment of dividend is established, declaration of dividend, right? It is probable that the economic benefits associated with the dividend will flow to the entity, and the amount of dividend can be measured reliably. You have done this in your standards. Gain or loss on sale of investment in mutual funds is recorded as other income on transfer of title from the entity and is determined as the difference between the redemption price and carrying value. I have actually sold that investment, be it mutual fund or shares or whatever it is, a capital asset. I've actually sold it, the investment. So the title has been transferred, transfer of title, and the gain is the carrying value of investment. Carrying value is the value as recorded in the books. At what value are we carrying the investment with us? And where do you carry the investment? On your shoulders or on your head? You carry it in your books of accounts. That is the carrying value. And what money did you get by selling it? That is the redemption price. And the difference is investment. Although subject to the indexation and everything, if you fall under the category. Yes, Sriram, the same point as in AS9. So interest on fixed deposits, I think completely fine. You should obtain a list of fixed deposit opened during the year under audit, along with the applicable interest rate and the number of days for which the deposit was outstanding during the period. This will give you the occurrence part. Yes, actually you haven't earned interest during the year, previous. First, you have to establish the fact that yes, the company has earned interest during the previous year. After this fact has been established, now you need to know how much interest relates to the previous year. If the company has shown 4,48,000, does the whole interest relates to the previous year? Or they have included the interest of preceding previous year or the next year into the previous year? We'll have to check for completeness. Other income earned during the period was appropriately recorded and there is no understatement. You forgot to include some interest, or overstatement, you included some extra interest belonging to a year before or a year after. Verify the arithmetical accuracy with the applicable rate and the number of days during the period under audit. So this is a part belonging to both completeness and measurement. It could fall in completeness as well as measurement. We are checking the arithmetical accuracy. And checking the arithmetical accuracy also gives us that it has been charged for the same number of years as falling in that year. For example, the company makes an FD in the month of January, 1st January, for 6 months. So 6 months means January to June. The year closes on 31st March. So for the 3 months, January, February, March, the interest would be taken into the financial statements of year 21-22. And the interest for April, May, and June, that interest would be considered in the financial statements of year 22-23. So I have to check that for 3 months, my period under audit is year 21-22, and in that year, 3 months of the interest, the FD are falling. January, February, March. So the interest for 3 years have been included in the financial statements under audit. Obtain a confirmation of interest income from the bank. So you get an interest certificate from the bank and you have to reconcile the bank with the books of accounts of the client. Also obtain a copy of Form 26AS or AIS and reconcile the interest reflected therein to the calculation shared by the client. Have you guys seen 26AS or AIS or TIS? Have you ever seen that? Siddharth, Independence vibes, Independence Day vibes, right? Sir, orange, blue, and green. Yeah, like the Tiranga. We all are in the 75th Independence Day's mood. So I was asking, have you people ever seen 26AS or AIS or TIS? 26 years summary, annual information summary, tax information summary. Oh, Khushi says no. Nilabja says yes, filing article. Hiral says no. Okay, I'll show you. I'll show you. Wait for a while, I'll show you. So these incomes on where TDS gets deducted, these are TDS statements which show our TDS with the government, with the income as well simultaneously. So we can check it from these forms as well, what amount of interest has been earned by the company during the previous years. Okay, measurement, but obvious that it has been measured properly. Dividend, if dividend has been recognized in a statement of profit and loss, only when right to receive the payment of dividend is established. Obtain a copy of 26AS, TIS, AIS. So dividend actually was not, did not find a place in this form, AIS, TIS, 26AS. But from the last year onwards, when dividend became taxable over and above rupees 1 lakh, you are getting even an entry of 500 rupees, 600 rupees in these forms, that this company has given this much dividend to you after the amendment in tax laws last year. AS, Gihani, AS 16 borrowing cost, not AS. 26 AS is a form of the tax department, not accounting standard. Please don't confuse it with accounting standard. 26 AS. No, Hiral, not 15G, H. 15G and H is something different. 15G or 15H is a form which we give to the other person who gives us income. Please don't deduct TDS. 15G, 15H is a previous form of the first stage. These forms are a form of the later stage after TDS has been deducted. So Gyani, this is not accounting standard. Okay, dividend is the same. Here you get to see. This is form 26AS. I hope you all can see form 26AS. Is it visible? 26AS, is it visible? AIS, TIS. Okay, let me show you differently. Yes. Okay, now you can see this Form 26AS. The PAN is active, financial year, assessment year, name of the assessee, address of the assessee. See over here. This is the information the tax department has. This is the name of the deductor over here, right? The name of the deductor. This is a TAN. TAN is something the deductor has to take a number to deduct TDS. If you have read about TDS, otherwise just pay simple attention. Okay. It says this particular person or company has paid you this much amount, 151 rupees 90 paise, and no tax was deducted on this amount. See, section 194, dividend. This is an entry for dividend. So if this is the company's 26 years, I got to know that TDS was deducted under section 194 or not. The company has got this much dividend. Total over here. This is the beauty of Form 26AS. You have to ask it from the company and you can even check it from here. See. Section clear? See. This is a section and over here you have the amount. Amount paid credited, tax deducted and TDS deposited. The person who is giving you the income, he has the liability to deduct TDS and deposit it with the government. This person or the company did not deduct any TDS. Even then, the information has been furnished in this form. Likewise, we have the AIS, Annual Information System, and TIS. Can you guys see TIS? I have changed. Yes. So the dividend has started appearing in 26 years since last year. Can you see the TIS, Taxpayer Information Summary now? I have changed the file. Can you see it? Just reply me. Is it visible? The TIS? Or you are just seeing the 26 AS only? Okay, TIS. See, Taxpayer Information Summary. How beautifully this particular form has classified each and every transaction. Can you see? Dividend. Number one, dividend. Says the company has received 2,179 as dividend during the year. Sale of securities and units of mutual fund. The company has sold mutual funds. It has sold mutual funds of the value of 6,469 rupees. Purchase of securities. It has also purchased securities of the value of 18,243. See, this is the summary. And AIS is Annual Information Summary. That is the detailed form of TIS. So we asked these forms from the company, please provide us with these forms. These forms are available on the income tax portal. When they log into their account on the income tax portal, the company's account on the income tax portal, they'll get these forms. You can download it from there for any financial year. Even for the current financial year as well. This form is available in draft mode. For the previous financial year, it is available in final mode. So these are the forms. Prabhas, let us not get into this. Derived value and processed value, you'll get confused. This is something which is not currently needed right now. Okay. Now, remember you said that you read there was sale of securities, sale of mutual fund, and it told us 6,469. So you have to verify that gain or loss on the sale of investment in mutual funds is recorded as other income only on transfer of title from the entity. We have actually sold those investments, right? Other income earned in the period was appropriately recorded and there is no understatement or overstatement. We can tally it with those forms. If the forms are showing more value, that means our books are understated. If they are showing less value, that means our books are overstated. We have to go through the reason behind this deviation and account for it. Why is there a deviation? Is there a problem with the form? Is that form incomplete, or we have to make amendments to our book of accounts, or there is some entries, rectification entries, or we have recorded it wrongly. Other income has been measured appropriately. So in the case of gain or loss on sale of investment, obtain the mutual fund statement and trace the gain loss as recorded in the books of account to the gain or loss as recorded in the statement. Right? Okay, Prabhas, what is the difference between processed value and derived value? Processed value is at what value have you sold, and derived value is as per the records available with the income tax department. What could have been the sale value? Yes, for surely, Siddharth, you can get it refunded if your tax liability is less than what tax has been discussed here. Nilabjo 26 AS will be done away with soon. Only AIS and TIS will prevail. Right? There are some problems going with AIS and TIS somewhere. So when AIS and TIS are they get completely foolproof, 26 AS will be done away with. That is what we feel as the professionals for the future. Okay, disclosure requirement for other income, they are completely clear. As per Companies Act, other income has to be shown as per interest income, dividend income, and this is not note, this is net gain. Net gain or loss on sales of and other non-operating income, like the rent. So this is what here is Schedule 3 to the Companies Act contains this disclosure requirement. It has asked for this disclosure requirement. That is why it has been written over here. Part 1 to Schedule 3 asks us to disclose this. Okay. So this disclosure requirement is common for all. Now, last year, the Companies Act has been amended and the schedule, and there is a new requirement for the companies. This is an amendment for you people from the previous attempt. The company shall give details of any transaction not recorded in the books of accounts that has been surrendered or disclosed as income during the year in the tax assessments under. For example, there was a raid at Tea and Cookies Private Limited, or there was a survey. श्याम जी बड़े घबराए हुए हैं, रेड हो गई, सर्वे हो गया, बता रहे हैं मुझे when I'm discussing with them as an auditor. Or who was the auditor? Aditi. Aditi said she is from Kanpur. Aditi was the auditor. तो अदिति को श्याम जी बता रहे हैं, मैडम क्या बताएं, रेड पड़ गया था और हमने 20 लाख रुपया सरेंडर कर दिया. भी ठीक है, पिछले सालों में हमने ये थोड़ा गड़बड़ किया, हमने ये इनकम डिस्क्लोज नहीं किया, ना बुक्स में ना ऑडिटर को, तो किसी वजह से देयर इज अदर इनकम और उन्हें नॉलेज नहीं था. हमने 20 लाख रुपीज वी सरेंडर्ड that yes, this is the income which we failed to disclose in our financial statements during all these years, and we paid tax with penalty on that particular amount. So if we disclose it, we surrender it to any income tax operation by the income tax department, any assessment, the Companies Act has put on a responsibility on the company that if anything such happens during the previous year under audit, this has to be given in the disclosures, the undisclosed income. Fine, the undisclosed income. Yes, the same of the sections Prabhas has written 68, 69A, 69B, C, D. You have done it in your first chapter of income tax. Fine. Unless there is immunity for disclosure under any scheme, and immunity for disclosure means you are exempt from disclosing that amount. You have paid the tax and penalty on that amount to the income department. It has to be kept confidential under a law or under any scheme of the income tax department. That's okay. You pay us the tax with penalty and will not ask you further anything. So the Companies Act has also said this, that unless there is immunity for disclosure under any scheme, कोई scheme आपको कहती है भी नहीं आपने कहीं disclose नहीं करना, बस आप हमें tax और penalty दे दो, that is fine. Otherwise, you'll have to disclose all such amounts in your financial statements as undisclosed income, and also state whether the previously unrecorded income and related assets have been properly recorded in the books of account during the year. I still remember one of my clients, while auditing his financial statements, I found that his profit and loss contains income assessed to tax during survey. So the income jumped by a margin from the previous year, huge margin. And I asked for it. He told me, "Sir, survey हुआ था उसमें ये income surrender किया." So had it been a company, it was not a company, it was a non-corporate assessee. Had it been a corporate assessee, so previously unrecorded income, I would have asked him, okay, you recorded it in your books of accounts. You showed it as your income. Or if any asset has been found, you have to now incorporate it in your books of accounts. So as an auditor, I have to check that this such income has been disclosed properly in the books of accounts. And if there is any asset related, that has been properly recorded in the books of accounts. Yes, Siddharth, like you can see on the news, Bharati IT departments. Okay. So that was all about the revenue part. That is all about the revenue part. I discussed each and every point in detail with you. And when we come to expenses after the break, purchases and other expenses, that is quite, that will take quite less time, because we have already discussed each and every part over here in the incomes. It will be really easy for you to understand and grasp the concepts related to auditing the expenses. I hope it is clear. No, Aditi, that is not a cutoff. That is a situational recognition. That is a situational recognition. If it has been recorded and it has been found, otherwise, why would the company disclose it? Why would the company have record it? It is recording because it has been disclosed or surrendered by the company in this year. Now it has to become a part of the books of account. No, Nilabjo, the auditor is not liable because the auditor is a watchdog and not a bloodhound. Auditors become liable in certain situations. Like it was on the face. How could the auditor skip it? But even if it took the tax department years of research and going through their papers, the auditor is not liable. Like he cannot just delve into each and every transaction. If he was not disclosed, because preparation of financial statements is the responsibility of the management. Whatever financial statements do we get, if the company has a building in some other city and it is not reflecting in the books of accounts, how will the auditor be able to know? How will the auditor get to know? There is a manipulation in the accounts, but which seems to be feasible, which can be relied upon. How is auditor liable? So anything which is on the face, any fraud or any error which is on the face of the financial statements, but the auditor skips it somehow, auditor could be placed liable over there, but not in such cases. Okay, so let us take a break of 10 minutes. It is 7:40 and we'll be back by 7:50. Fine. Let us Okay, everyone. Are we back? So we are done with the other income part. We are done. Okay, back. Yes, Karthik, whatever you have written, you have understood the concept really well. Whatever you have written is fine. You have understood it well. Okay? बिल्कुल सही लिखी है आपने गुप्ता साहब. चलिए. Now we are done with sales. We are done with other operating income. Now let's come to purchases. Okay? And we have the employee benefit expenses as one part, then depreciation expenses. Okay? 1, 2, 3, and then all other expenses. In 4 parts, we'll be doing it, and you will find almost 80% of the points are same what we have done in sales. If we have understood occurrence, existence, if you have understood completeness, you have understood measurement, you have understood cutoff, you have understood disclosure, you all know what are purchases, you all know what are employee benefit expenses, you all know what is depreciation, amortization, and other expenses. It's a cakewalk then. So over here, we have cost of raw materials consumed in our format. Since it is not a manufacturing concern, Tea and Cookies Private Limited is just a trading concern, there is no such cost of raw materials. Had it been a manufacturing concern, there would have been entry in this part as well. Now, purchases of stock in trade. Here we are. Tea and Cookies Private Limited is purchasing tea. It is purchasing premium tea. It is purchasing miscellaneous other items like cookies and all. So for the sales are approximately 6 crores and 22 lakhs. 4 crore 78 lakhs is tea. 1 crore 42 lakhs is somewhere around miscellaneous items of cookies and all. And premium tea is somewhere, I suppose it is 1,65,000 somewhere there. Premium tea. So ये नोट जल्दी मुझे बताइए, टेल मी फास्ट, ये नोट किस assertion के बारे में आ रहा है? Which assertion is this note telling us? Fast. ओके अदिति. सो कार्तिक ने क्या पूछा था? कार्तिक ने मेरे को पूछा था, सर आई एम फेसिंग अ डिफिकल्टी एंड ही गॉट कंफ्यूज विद द कंसेप्ट्स. सो ही टेल्स, ही इज आस्किंग मी इन हिंदी, अक्रेंस मीन्स जो रिकॉर्ड हुआ है वो असल में हुआ है या नहीं. कंप्लीटनेस मीन्स जो असल में हुआ है वो पूरा रिकॉर्ड हुआ है और उतना ही रिकॉर्ड हुआ है. मेजरमेंट मीन्स जो अमाउंट हो रहा, रिकॉर्ड हो रहा है, वो सही तरीके से कैलकुलेट किया गया है या नहीं और सही खाते में दर्ज किया गया है नहीं. और डिस्क्लोजर मीन्स जो भी रिकॉर्ड कर रहे हैं उससे जुड़ी जो भी जरूरी बातें हैं वो अलग से बताई गई हैं या नहीं. दिस इज व्हाट कार्तिक आस्क्ड मी. इफ आई ट्रांसलेट इट इनटू इंग्लिश फॉर द पीपल हु अंडरस्टैंड इन इंग्लिश, he is asking occurrence means whatever has been recorded, it has actually occurred during the year. Completeness means whatever had occurred during the year, it has been recorded completely. Whatever has happened has been recorded in the books. Measurement means whatever amount has been recorded in the books, it has been calculated properly and it has been fed into the right system, or it has been recorded as an entry in the proper system. And whatever has been disclosed, it has been disclosed as per the requirement of the financial reporting framework. This is what Gupta ji asked me. Okay, Aditi? No Kushi, this is disclosure. Akashnal good, Hiral good, Prabhas good. Right, this is disclosure requirement. Okay, then it is asking me changes in inventories of finished goods. So what would be the changes in inventory of finished goods? Here it is. Opening stock minus closing stock is the changes in inventory of finished goods. Here we have somewhere around 1 lakh. 15 lakhs. So this is a separate note. Work in progress and stock in trade. Again, it is of for manufacturing concerns, no entry over here. So this is all related to purchases. Fine, let's move ahead. Purchases and disbursement cycle in a business refers to a set of processes that begin when an order for buying goods or services is placed based on requirements of the production if it is a manufacturing concern, user department, and ends when the entity receives the product and makes the complete payment to the vendor. So when does it happen? When the entity receives the product and makes complete payment to the vendor. This is what a purchase cycle is, disbursement cycle is. Let's see what a purchase cycle is. So this was a gist of how is a purchase cycle, what is a purchase cycle and how is it audited. Yes, Cyril, same. So as a part of the year-end audit of entities' financial statements, auditor test purchase transactions and the internal controls, like we did in the sales, over those transactions to ensure that the entity is not materially misstating its purchases or accounts payables, the creditors, as follows. What is it? Auditor needs to obtain a clear understanding about the organization and its production centers. What are the auditor's consideration? This is a consideration of the auditee organization, company, and its internal controls. These are the points related to that. Okay? Don't confuse it with the assertions. This is the preliminary understanding of the auditee, the company, and the internal controls. SA 315. So the types of services or products, I got to know that they are purchasing tea, they are purchasing cookies, sources of procurement, whether they are purchasing from the domestic market or importing them. What is the general availability of that commodity in the market? Terms and conditions of purchase. Who are the major vendors who are supplying them? Are they getting tea from Assam, South, Uti, Kerala? Where are they getting the tea from? Where are they getting their cookies from? What is the credit period allowed to them? They can make payment after 1 month, 2 months, 3 months. What are the quality checks put into place? Are expired products, have you accounted separately for the expired products? What do you do to them? How are they accounted for? As wastage or what? Purchase items, whether what are the credit terms of purchase, or if you purchase in cash, from whom? Who are the vendors? Okay. Identify the control points over purchases, whether segregation of duties exist, as we watched in that video. The person who is receiving the payment should not be the person who is recording the payment, because he'll receive rupees 1000 but record rupees 800. They should be different persons. The person who is making the invoice should not be the person who is sending the invoice. Whether competitive quotes are invited from all the vendors, at what price would you be selling us this product? Whether a purchase committee exists, who authorizes purchase price, who issues and who authorizes purchase orders, when and how the goods are received, who receives the good and acknowledges the receipt, who checks the quality, quantity, and specification of the goods when received in the godown and prepares the good receipt note. GRN, the goods receipt note, contains all these features and they should be tallied with the purchase order. Who approves the vendor invoice? Yes, this payment can be initiated to the vendor. Whether a two-way or a three-way match process exists. What is a three-way match process? Tally the purchase order with the goods returned, goods receipt note, and the vendor invoice. Do they match with each other? How the purchases have been recognized in the system, recorded in the system. Yes, Prabhas, yes. Testing the controls over the purchase cycle. If they are effective, auditor can reduce the extent of substantial testing. We did it in sales as well. What are the common internal controls? Inviting competitive quotations. We did it. Yes. For shortlisting the vendors. Purchase orders should be properly numbered. Purchase order authorization over certain limit for any purchase over rupees 50 lakhs from a particular vendor. Board's resolution is required by the purchase department. Generation of goods received note. Quality inspection of goods. Who is inspecting? The two-way, three-way match, as we discussed. Authorization of purchase invoices. Who has been authorized with the preparation of invoices? Appropriate authority to recognize the purchases in the system. Yes, Sriram, the maker-checker principle. Completely right. The auditor selects a random sample of transactions, but obvious, he'll check some invoices and he'll check the invoices with the purchase order, the goods received note, the invoices, the inward gate entry register, whether it matches with the goods which have been entered in the register, the vendor reconciliation and statements, the vendor's invoice, right? How much has been charged and for what quantity. Quite obvious, right? Performing audit procedure is must. This is the same point as we did in sales. For example, there is purchase price is 100, 15,000 units purchase. We expect the purchases to be 15 lakhs. If there is a variance in the amount, we should ask for such variance if it is a discount or the purchases have been deflated to show higher profits. Right? Change of purchase price for a few orders due to excess demand. So there was a purchase, if we ordered in a small quantity, there was no discount. But if we ordered in bulk quantity, you have read about the EOQ questions in costing, you have solved them. The discount offers, whether to purchase at EOQ or at the quantity of discount, the same way. Now the procedures related to purchases. Okay, there is a problem over here. It is not sales, it is purchases. I'll amend it. It is not purchase. Recorded purchases actually represents goods received, services availed during the period. If we have availed services, for example, for Tea and Cookies Private Limited, the company is availing the services of packing the goods from another entity. So whether actually packing service took place in the premises of the company or not. So same, there should not be the case of fictitious vendors as in the case of fictitious customer in sales. We have to check them, tally every entry with the vendors, the register maintained. And we should also ensure the existence of some vendors, external confirmations. Whether the goods received at the factory gate and whether there exists an entry in the security gate inward register, whether quality inspection of goods was done, whether a goods receipt note was prepared and signed by appropriate person, whether the purchase invoice was approved as per delegation of authority and a 3 or 2-way match as discussed above was done. I told you, purchase order, goods received note and vendor invoice. What is a purchase order? The order we send to the vendor. Vendor is the person who is selling us the goods. That is a purchase order. Whether the stock record has been updated, stock increases after we receive the goods. The purchase invoice receipt should be the original copy and not photocopy or carbon copy. We want the original invoice because we are the purchaser, not a photocopy or a carbon copy. It should be received in duplicate or I should get the original copy as a purchaser. Right? Purchase invoice should have been booked only when risk and reward incidental to ownership has been transferred. In the same case as we did in the case of sales. When the seller recorded the sales, we record the purchases. Right? Specific consideration for cases where the terms of delivery agreement are free on board, cost including freight. What is free on board? That you have to bear the insurance and the freight charges. And what is CIF? Cost including insurance and freight. Whatever the transit insurance and freight the seller will bear, will pay him full amount and we should get the goods delivered at our company or our factory or our godown. Purchase invoice should be in the name of the company. In case of different branches, it can be in the name of appropriate branch. Input tax component, the GST component of input tax. What is input tax? Tax which we have paid to the seller and we are going to claim it with the GST authorities. It should be properly credited to the debited to the input tax ledger. We should obtain the tax returns from the company and match the input text with the returns being filed. Is the input text balance as available on the GST portal? Does it match with what it is in the books of accounts? We have to check for any variances. In case of purchases made from related parties or associate sister concerns, the auditors need to verify if requisite approval from board of directors has been obtained. This is a very important point in case of purchases. Sale to related parties might not be a very important point, but purchases, it is a very important point. AS 18, SA 550, and in case of tax audit as well. You have to give the list in case tax audit report as well as statutory audit report that yes, we have made purchases from related parties. We have paid this much amount, and it should be properly approved by the board of directors that yes, you can purchase tea and cookies from Shamji's brother. We authorize, the board of directors should authorize, because from related party, we can ask them, okay, the rate is 100, please give it as 80. Out of natural love and affection, the related party, okay, 80 for you. Right? Purchase deflated, profit shown higher. We can tell them the market price is 100. Sell this product to us at rupees 150. The government says you are getting a product at rupees 100 in the market. Why are you purchasing at rupees 150? By purchasing it at 150, I am inflating my purchases value. This will decrease my profit. I'll have lower profits. I'll pay lower tax to the government. This is where the key is. So in the case of purchases and other expenses, transactions with related parties become really important. The auditor should review whether purchases should be capitalized or expensed off in statement of profit and loss. Review journal entries for unusual transactions. Obviously, if you have purchased a fixed asset, that should be capitalized. If you have purchased a trading item, that should be put into profit and loss. Unusual transactions, we have already discussed in the part of sales. Yes, Hiral, yes, yes. Completeness, we have to perform cut-off test to ensure that purchases that actually took place during the previous year have been recorded only. For this purpose, the auditor should examine material inward records, physical inspection records, say last 5 transactions at the period end to check that all corresponding invoices have been duly entered in the purchases book and none have been omitted. So he took the last 5 purchase transactions, whether material inward records match with the invoices. Goods in transit should be treated as per the agreement with the vendor regarding transfer of risk and reward of ownership in goods. If it says the goods are in transit, now they are your responsibility. I have recorded the sale. You have to record the purchase as per the agreement with the vendor, because if something happens to the goods in transit, what is your terms of agreement? Is the vendor liable for it, or as a purchaser are you liable for it? That depends upon the agreement between you and the vendor. Obtain written representation from the management that all purchases that took place during the year have been properly recorded. Quite a general point, right? Measurement. Now for measurements, we have to perform analytical procedures to check the overall reasonableness of purchase quantity and price. The first part is consumption analysis. The auditor should scrutinize raw material consumed as per manufacturing account and compare the same with previous years with closing stock and ask for any deviations. Ours is not a manufacturing concern, ours is a trading concern. Had it been a manufacturing concern, the auditor would check the trend of raw material consumed. What is the price of raw material? Had he been making tea, he'll check the raw materials would have been milk. tea leaves, sugar, sugar-free, masalas, right? Had the company been making cookies, the wheat flour, again the sugar, the preservatives, whatever they are going to use as raw material, the auditor should study the trend analysis, should carry the trend analysis of the cost and the quantity of the raw material. That is consumption analysis. Stock composition analysis. You might have read about ABC analysis in your costing. Auditor should collect the reports from the management for composition of stock. How much is the raw material as a percentage of total stock? And compare the same with previous years. So, what is the average raw material stock maintained by the company at any point of time? What is the average work in progress? What is the finished stock? How has the finished stock been classified as per A, B, and C category? This is stock composition analysis. Ratios, obviously, we will study the creditors turnover ratio, stock turnover ratios of current year with the previous year. We will tally the closing stock with opening stock, purchases, everything what we can do to check the accuracy of the purchases, whether properly valued or not, we'll do it. Creditors turnover ratio, what are the credit purchases? How long is the credit period? What credit period are you being allowed? How fast are the creditors moving? Are you lagging in payments? What is the stock turnover ratio? Is the stock becoming obsolete? Is it high? Is it corroborating with the stock and the sales? Right? Presentation and disclosure we have already did. Present purchases of stock in trade properly, work in progress and finished goods differently, and the most important, transactions with related parties. And I told you the logic behind this. Why transaction with related parties is very much important in the case of expenses. Right? Any doubt in purchases, please? We are done with the purchases. Any doubt in purchases? Oh, nice. Good. See, employee benefit expenses, the disclosures. Here, only salaries have been paid by Tea and Cookies Private Limited, but here we could bifurcate it into PF, or we could bifurcate it into staff welfare expenses and other perks as well, which have been given to the employees. Okay. Then comes the finance cost, is the bank charges, the interest paid to bank or loans taken from other people. Then depreciation and amortization expenses, a separate note, and all other balance expenses have been put into other expenses. This finishes our expenses, which we are going to do in detail in the next 15 to 20 minutes. Neha, stock composition analysis means there is stock in the godown, right, for a manufacturing concern. So what is the amount of the stock of raw material? What is the amount of the stock of work in progress? What is the amount of stock of finished goods? If you are making cookies, what is the amount of wheat flour? What is the amount of cookies in the oven on the night of 31st March? Still in process, how big? What is the amount of fully baked cookies and packed by the company? That is finished goods. So proper segregation of the stock. Further finished stock into as per A, B and C category. Higher value, low in stock, low in quantity. Medium value, medium stock. Low in value, high in stock. Occasional segregation of duties, as in I couldn't understand your point. Okay, I'll come to it again. Employee benefit expenses, commonly known as payroll expenses, aggregate sum an entity pays as a consideration to its employees for their labor efforts, along with other perks and benefits like gratuity, superannuation, leave encashment, provident fund, contribution towards their hiring, their welfare and training. I'm not getting into the meaning of these terms because I suppose you have done them in your taxation part. So for many industries, basically the service industries like our industry, the chartered accountants, employee benefit expense is the most critical because it is the largest expense, and it becomes a responsibility in the case of manufacturing organizations as well as the service industry organizations to check for the genuineness of such transactions. You might have read in your costing part the labor chapter. The labor chapter. Purchases relate to the material chapter. Now this comes the labor chapter. Labor chapter mein what we do? Labor turnover and fictitious employees, dummy record of labors and wages. This is what the auditor has to check. Again, auditor has to obtain a clear understanding of the entity. What would the auditor check? What is the process of hiring the labor or the employees? Appraisal. Appraisal means checking the employees working throughout the period. How is he working? Checking his performance, evaluating his performance, that is appraisal. And retirement process, retirement policy. If somebody wants to retire voluntarily, what is the policy? So auditor has to test the controls regarding the payment of these employee benefits, and if they are effective, he can reduce his substantive testing. So how does he check? Yes, Aditi, yes. Yes, Hitesh, auditor has to. Yes, auditor has to check the default and delete payment as well. The auditor will check how the attendance records are maintained. How has the company maintained the employee master? Employee master means each and every detail of the entry. What is the Aadhaar number? What is the PAN number? Everything. The address, period of employment, when did the employee started working in the country, in the company, right? What is his annual salary, monthly salary? Who authorizes and approves the monthly payment to the employees? Who computes the deductions from the salary, the taxes, TDS, the PF, the other contributions? And how are the other benefits like gratuity, leave encashment accounted for bonus? This is what auditor has to understand first, the company's mechanism of dealing with such expenses. So auditor will test sample transactions. What will he check? He'll check the appointment letter of 3 to 4 employees, the appraisal letters, how their work has been evaluated, their attendance records, are the leaves being properly accounted for, the paid leaves as well as the unpaid leaves? What is the policy of the human resources development department of the company? Again, the employee master. So substantive analytical procedures, what would the auditor do? Monthly expense reasonability. As per the number of workers working in the company, are the monthly expenses reasonable? Or they are quite high when compared to the number of people working in the company? Comparison with the previous accounting period. And the most important is an expectation in relation to the expense incurred during the period under audit, and compare it with the client's business operations with the overall trend in the industry. Tea and Cookies Company, private limited company says we pay almost 50% our expenses in form of employee benefits. And the same company in the industry pays only 30%. Or another companies in the industry rate of expenses, the industry's rate of share of expenses of employee benefits to their total expenses is 30%. How is Tea Cookies Private Limited paying 50%? There could be some loopholes, there could be some leakages. How are they? Their 50% of expenses are relating to only employee benefit expenses. The auditor smells something fishy. This is an expectation when compared to the industry. Now, the assertions to employee benefit expenses. Recorded employee benefit expenses were actually incurred during the year. How would the auditor check that? Attendance. If attendance is checked, biometrics or with attendance register, you can definitely check for the fictitious employees. Auditor can meet the employees on a sample basis. Auditor can ask for a list of the employees and on sampling basis, check their bank details, their ID proofs, Aadhaar cards, PAN cards with the company copy. And whether the payment has been made to them actually or not, it is just recorded in the register. The payment has not actually been made. It is a high sign of recording of fictitious employees. You will obtain a list at period end to check with the monthly movement split between new hires, leavers, and continuing employees. Labor turnover ratios. You have read in costing. The auditor will get them calculated and check for any deviations. Comparing it with the previous accounting periods of the company as well as with the industry. Intra-firm comparison and inter-firm comparison. For sample employees selected, check their appointment letter. Verify whether salary for first month and subsequent months was processed as per the appointment letter, as per the agreed terms with the employee. And for some selected employees or resigned employees, obtain their full and final computation. What amount of gratuity was paid to them? What amount of leave encashment was paid to them? And whether employees' acknowledgement has been taken, there is no dispute regarding that. There is no dispute regarding the payment to the employee. Completeness. How do you check the completeness? I will obtain the monthly salary register for all 12 months. And I'll check with the monthly entries in the salaries journal. That is completeness. I'll compile a monthly payroll as an auditor. Aditi has to compile a monthly payroll by calculating average salary per employee per month and comparing it with the previous year or previous month and analyze the reasons for variance. The reasons could be increase in payments, annual increments. Some employee might have a new employee have joined at senior level. His salary is high. You have paid good bonuses this year. So such amounts and variances can be checked for because of these logics. That is completeness. Measurement. So how would we check? Accrual. Provision has been made for employee benefits. You know, gratuity funds and provident funds. They are further invested into market investments. These funds have been properly maintained or not, if required under the law or as per the policy of the company. In case of PF, ESI, if applicable to the entity, ESI is applicable to entities, companies with more than 10 people and PF more than 20. Although it can be PF and ESI provisions can be applied by the company itself voluntarily, but as per law, it is required. PF contribution 12% by the employer, 12% by the employee. ESI contribution 0.75% by the employee, 3.25 by the employer of the basic salary plus DA, whatever the formula is as per these respective acts. So by applying the applicable rate to the wages, we can come to a conclusion that yes, this much be the total PF or the ESI amount that should have been deducted from the salaries of the employee and to be recorded as a separate expense on employer's part. So employee's part would be deducted from the salaries and employer's part would be shown as a separate expense. Whether they have been paid to the appropriate authorities within defined timelines, you should not keep the money with yourself. You're showing it as an expense and you have to pay to the appropriate authority. You have to perform analytical procedures. And you can also carry out production per employee analysis. How productive are the employees? In manufacturing concern, units produced per employee. And then compare them with previous years and industry norms. And if there are any variations, we should ask for them. In the industry, a particular person produces 200 to 500 cookies in a day. In your company, he's producing only 50 cookies a day and you are paying him salary for 1 month as per industry norms. What are you doing? Something is fishy. Either you don't know how to do business or something is cooking in your accounts department. Again, we have to disclose, as I told you, salaries and wages, contribution to provident and other funds, staff welfare expenses. These are the disclosure requirements of employee benefit expenses as per the law. I'm moving a bit fast because we have done all this in the sales each and every point, and this is what employee benefit expenses was for. Any doubt in employee benefit expenses, please come up with it. Yes, Hitesh. You can also check refreshment expenses to employees, for sure. You can. ऐसा ना हो ना रोज एम्प्लॉइज को डोमिनोज का पिज्जा का वाउचर दिया जा रहा है या डोमिनोज के पिज्जा के वाउचर डायरेक्टर ने घर पे खाया और वाउचर लाके कंपनी को दे दिया बिल लाके दैट एम्प्लॉइज के खाते में डाल दो. The director would have a great pizza party as his home and the invoice is generated in the name of the company to claim expense. You'll have to check for it. पार्टी हुई थी, किस चीज की पार्टी थी, क्यों की गई थी, इतनी पार्टीज हो रही हैं कंपनी में तो काम कब होता है. Entertainment expenses, refreshment expenses, staff farewell expenses, that has to be checked. Yes, Karthik. Basic structure is the same with every assertion. Yes, Aditi. Traveling expenses, we'll do it in other expenses. Depreciation and amortization, we all know. What is depreciation and amortization? Depreciation relates to tangible assets, PPE, property, plant and equipment, and amortization relates to intangible assets. So we have to check for depreciation and amortization properly. How can you check for it? These are allowances. We have to check the fixed asset has already been purchased or constructed. Depreciation rates. Refreshment expenses is a staff welfare expense, nilabjo, and they would fall under every assertion. If you are checking whether such expenses have actually been incurred, existence. Whether all such expenses have been recorded, completeness. Whether such expenses have been recorded as per the invoices, measurement. Disclosed in staff welfare, presentation and disclosure. Checking refreshment expenses falling under every assertion. Nilabjo, I hope I am clear. Okay. So what does the auditor need to check? Entity's accounting policy related to depreciation and amortization. Which method are they following? If it is a company, we have to check the requirement of the Companies Act. If it is a non-corporate assessee, we have to check the requirement of applicable accounting standards. Your standard on depreciation and your standard on PPE, it has been merged now. Consistency, the accounting policy, consistency, accounting assumption. Any change in the method of depreciation has to be adequately disclosed. Whether the depreciation has been calculated after making adjustment of residual scrap value from the cost of the assets, much required in the Companies Act. Whether such expenses or charges are valid. Depreciation and amortization are not expenses, but they're allowances actually. A capital expenditure you make and you are allowed in parts over several years, over the useful life. Properly calculated and recorded in the appropriate period. Now, as per the Companies Act, a component of a fixed asset has to be classified separately. If you have done AS10 on PPE, you all must be knowing about this, right? Component, for example, there is a big machine, and after 2 years or 4 years or 5 years, it has a life of 10 years. And after 5 years, one of its major components has to be changed. It wears out. So that component would be accounted for separately from that machine. This is what you might have read in AS10. And the most appropriate method of depreciation has been chosen separately for that component. How can you check the occurrence of depreciation and amortization expense? Obtaining the fixed asset register maintained by the entity, but obvious. Yes, right, Himanshu, component accounting. I'm not going into the details of components because you have already done that in accounting. Obtain the list of all components identified by the management. How does the entity identify? Yes, this is a particular different component and this is a part of our original fixed asset. So how is the entity classifying components? Obtaining an understanding of entity's process of charging depreciation and amortization. How is the depreciation being calculated and whether it is being calculated throughout the year or on the basis of some policy, because as per the Act, it has to be calculated on per day basis. Completeness. How can we check whether depreciation has been understated or overstated? What happens if the capital asset purchased is of not much a bigger value? We even don't capitalize it. We put it in the statement of profit and loss. That would decrease our profits and we'll have to pay less tax. Sometimes it happens to claim more depreciation, higher depreciation, some items of tools and spares which form part of profit and loss account, repair and maintenance. We capitalize it in the fixed asset. We add it to the value of fixed asset and claim higher depreciation. So there are two ways. Either you capitalize the revenue expenses or you put the capital expenses, you charge the capital expenses in the profit and loss accounts as per your wish. without going by the accounting convention, right accounting treatment. So auditor has to check for that. And believe me, when you will do the process of auditing in the offices or at the client place, this point is the most important you will find. And you will make the client change it. An article, when he makes the client change a particular accounting entry, that feeling is the best feeling in the world. To address this risk, the auditor may choose to check the nature of asset from the fixed register. Further, there could be a fake asset has been capitalized in the books, and to mitigate this risk, auditor should verify the fixed asset physically. There is a car purchased by the company. Alas, where is the car? You are capitalized the car. You are claiming the petrol expenses. You are claiming the car repair. Where is the car? I cannot see any car in the company. There is only one car that should be in the company. I came for 4 to 5 visits during the previous 2 months. I couldn't see the car. All the employees are here. All the directors are here. So who is taking the car with them? We have shown building expenses. We are claiming depreciation on it. We have renovated the building. Well, as an auditor, I am verifying the building. Where is the renovation? I cannot find it. Where is the renovation? Show me the invoices of paint. Show me the invoices of concrete. Show me the invoices of bricks. Show me the invoices of interior designer if you hired one. Outsource it. Where is the renovation? Is it in here? Obtain a list of all additions, deletions, all the new additions to the fixed asset. If any sale has been made, obtain a list of all that. And it has been done under the proper approval of authorized person. Measurement, completely fine. You have to check the fixed asset register properly. Depreciation has been deducted and written down value has been properly calculated. Component depreciation has been properly calculated. Intangible assets have been properly amortized. Goodwill, patents, copyrights. I hope you all know these are intangible assets. Depreciation is charged on the assets from the date when it is ready to use and not from the date of actual usage. If it is ready to use from June 1 and you are using it from August 1, you have to charge a depreciation from June 1 because passage of time is also a part of depreciation. The asset was ready to use on June 1, irrespective when did you start to use it. You have to take care of revaluation reserve while depreciating a revalued asset. Depreciation is different as per Income Tax Act and as per Companies Act. So while filing the income tax return, the depreciation has been computed as per Income Tax Act, and in the books of accounts, it has been calculated as per the Companies Act. That is what gives rise to the deferred tax. I hope you have read about the AS22, taxes on income. There is a term deferred tax. This gives rise to deferred tax. Difference in depreciation as per the Companies Act and as per the Income Tax Act. And you will find deferred tax in the case of companies only. We have to perform analytical procedures to check the arithmetical accuracy. You can recompute the depreciation yourself and check it with what has been charged in the books of account. You have to take care of the useful lives. The Companies Act has come up with the useful life of each and every asset. You have to check for it. Residual values have been properly verified, right? And it has been computed prospectively. I hope you all know the difference between prospectively and retrospectively. Prospectively means from current day onwards, and retrospectively means from previous period. If there is a change in the useful life of any asset, you have to charge depreciation on the revised life from current day onwards. There should be no retrospective adjustment. That was for measurement of depreciation expenses. presentation and disclosure, accounting policy, very important, useful life, very important, residual value, depreciation method. This is all disclosed in the fixed assets chart. The fixed assets chart which you prepare as an annexure to the balance sheet, as a note to the balance sheet. And accounting policy, depreciation method you have to give in disclosures. Residual value, useful life you have to give in disclosures. Quite normal. Now be with me for the only next 5 minutes and I'll complete the profit and loss part. Any doubt in the portion of depreciation and amortization, please let me know. Any doubt in the portion of depreciation and amortization? Please let me know. Only then I'll proceed with the last part of for today's session, other expenses. Okay. What are other expenses? We have done the chapter of material from costing, purchases. We have done the chapter of labor from costing, employee benefit expenses. We have done the chapter of factory overheads, depreciation and amortization. Now, the overheads, other expenses. Are you able to relate it to your costing chapter? These are the expenses, essential and incidental, indirect to running of business operations. For expenses like rent, power and fuel, if it is power and fuel in the trading account, direct expense, or electricity expense could form a part of the indirect expenses also. If power and fuel relates to the factory, it is a direct expense in the case of a manufacturing concern. In the case of trading concern, it is always an indirect expense in profit and loss account. So we check the bills. What do we need to check? Okay. Yes, useful life as per schedule to Karthik. Okay, fine, Karthik. Karthik says audit के साथ साथ advance accounting के doubt भी clear हो रहे. Fine, ठीक है. I'll take it as a whether the expenditure pertain to current period under audit. What was it? Come on, fast. Whether the expenditure relates to current period under audit. Which assertion is this? Come on. With other expenses, your quiz for the day. Whether the expenditure pertains to current period under audit. Yes, Nilabju. Cut off. Very good. Whether the expenditure qualifies as a revenue and not capital expenditure. So if you have purchased a car's battery, you have replaced inverters batteries, that is a capital expense. You cannot put it in repair and maintenance. Something which adds to the life of your asset, increases its capacity or productivity, it is of capital expense, not a revenue expense. Revenue expenses are recurring expenses, right? Revenue expenses are recurring expenses. So you should check that the expense recorded in repair and maintenance, it should actually is a recurring expense. We have to get the car serviced every 6 months annually. It should, whether it is a capital or a revenue expenditure, we have to check for that. I gave you the example. Valid supporting documents like travel tickets. Shyamji went for a conference in Assam relating to tea dealers. Check the travel tickets, bhai. Stay arrangements, travel insurance policy or the insurance policy relating to the assets. Third party invoices, what it could be. Somebody booked the tour on your behalf, you reimburse them. Travel agent. Whether the expenditure has been classified under the correct expense head. Correct expenses. So it could be you have recorded transportation expenses and travel expenses. So tell me, okay, fine, Shyamji Washington return. So tell me, if Shyamji Washington return travel to Assam for attending a conference, is it a transportation expense or a traveling expense? And while coming back, he gave an order to a dealer over there for some tea. The tea was sent to his location in Kanpur. So that tea, sending of tea, is a transportation expense or a traveling expense? Which one is traveling expense and which one is transportation expense? So I want to know whether the tea was transported or tea traveled by itself, and whether Shyamji Washington return traveled by himself or he was transported. So this is just an example of recording the expenditure under the correct expense head. Transportation expenses or freight and traveling expenses, they are different. Right? So T is transportation and Shyamji Washington return is traveling. You cannot transport Shyamji Washington return and you cannot put the transportation expense of T in the traveling. The auditor has to check this. I tell you an example. While I was auditing a client, so what happened? 2 bonus expenses. He wanted to write in the profit and loss 2 bonus expenses. But what did the accountant write? 2 BOUNS, 2 bounce expenses. And I told him, if it is bounce expenses, you should have charged it in the bank charges. The expenses have been put under the incorrect head. Bounce charges means some check bounce charges. Put it in the bank charges head. Why have you put it in a separate head to bounce charges? Oh, sir, no. It was a mistake at my end. This is bonus, BONUS. We just interchanged the place of one word, bonus and bounce. The expense became a different expense. This is a real life example I gave you. Whether the expenditure was authorized as per the delegation of authority matrix, who was authorized for that particular expense, whether booking tickets or ordering for tea or ordering for transportation of tea, and whether the expenditure was in relation to the entity's business and not a personal expenditure. Shyamji Washington return family holiday पे नहीं गए थे, वो actually tea conference attend करने गए थे. Tea conference की we have the entry fee and the pictures from over there. So what could be the other expenses? Rent. Obtain a month-wise expense schedule along with the rent agreement. Verify if accorded for all 12 months. This is occurrence. This is completeness. Measurement. Escalation clause. What is an escalation clause in rent agreement? That rent would be increased by 10% after the end of every period. You might have done it in contract accounting, the escalation clause. With time, the fixed amount increases as per the agreement. So measurement we have to check as per the rent agreement. Also, if the rent agreement should be in the name of the entity and whether the expense pertains to premises, the rent should not belong to the personal home bungalow of Shyamji Washington return. The property should have been used by the company and the rent agreement should be in the name of the company. This is what we have to check for our disclosure part. Right? Okay. Power and fuel. Month-wise, you can ask for electricity bills. Okay. Occurrence. Recorded for all 12 months. Completeness. Compile a month-wise summary of power units consumed Applicable rate and check the arithmetical accuracy as per the average rate of the bill. Measurement. In relation to the units consumed, analyze monthly power units consumed by linking it to the units of finished goods produced and investigate reasons for variance. This is for manufacturing concern. As per the industry, the electricity expense is really high for Tea and Cookies Private Limited. Why is it so? What is the consumption, electricity consumption? And what amount of electricity do you require to produce your finished goods? Why are you consuming more electricity? Is there a productivity linked defect? Your employees are not that productive, or you don't know the process of making products in this business. This is what power and fuel can give us. Insurance. Obtain a summary of insurance policies taken. Insurance could be for the building, insurance could be for the car, insurance could be for the stock. Loss of stock policy, accounting. Loss, consequential loss policy, loss of profits. Can you recall? You have to check the insurance policies and check whether the expense has been properly. So this is occurrence. This is completeness and measure. Occurrence and completeness. This is measurement. Whether the expense has been correctly classified between prepaid and expense for the number of days. This is measurement and cutoff. Prepaid means proper accounting period. I hope you all know how to calculate prepaid expenses and outstanding expenses. This is just a normal final accounts part. How to calculate prepaid insurance, prepaid expenses and outstanding. So you have to check for the prepaid calculations. And to be very frank with you guys, in my 90% of the audits, prepaid insurance is always wrong. I have to recalculate it and get the accounts adjusted as per the calculation. Mostly firms and companies calculate pre-insurance. I find only 10% of the clients who actually calculate exact prepaid insurance. Otherwise, there is usually a huge difference. So this is the most interesting point, and this is the point where you as an article trainee are going to tell the client, sir, प्रीपेड इंश्योरेंस गलत निकाला है, इसको सही कीजिए, हमारे हिसाब से ही निकल रहा है, कैलकुलेशन देंगे उन्हें. And you'll feel like, yeah, I'm a chartered accountant trainee. Legal and professional expenses, obviously month-wise summary. What is the agreement with them? If it is a non-recurring expense, select a sample and vouch for the attribute discussed above. If it is a non-recurring expense, means कभी कभी हो रहा है professional expense. So for what purpose it is being expended? You are not giving professional fee to Washington Returns wife who hasn't studied school past 4th class, and you are giving professional fees to her in her name. For what purpose? What is she doing to the company, giving to the company? What kind of professional services is she giving to the company? Check. This is what you have to check. And if there are some legal expenses, this may give rise to a suspicion that the company might be fighting a case in the court, and whether the company has made a provision for any payment which the company might have to make as a result of losing that case in the court of law. So from legal expenses, you can also check for the provisions against the court cases or disputes, and whether they have told this to the auditor or not. The last part and your favorite part, traveling, repair, maintenance, other miscellaneous expenses. Samples, select samples, check for their vouching, compare trends, perform analytical procedures, perform per unit procedures. Traveling or transportation, I think we have discussed. Repair maintenance, I told you, capital and revenue. Printing stationery, check for bills and the component of GST, and other miscellaneous expenses. What so far we have read, apply each and every procedure. This finishes your profit and loss. This finishes your profit and loss part. How will you audit the items of profit and loss from the financial statements of a company? Right? This is what it is. I hope I'm clear with the profit and loss part. Any doubts for today, please come up. Any doubts for today? Where did you read this, Hiral, monthly retainer? Where was this? Can you please tell me? Can you please locate it for me? Where was it? Monthly retainer agreement, in which part was it? The monthly retainer agreement? See now. This was the profit after all the expenses, provision for taxation, deferred tax, and now this profit, which we have to take the general reserves. So we have audited the profit and loss statement of Tea and Cookies Private Limited. Now I will be uploading the notes till now. By tomorrow, you have to read from the study mat. You can take help from the presentation which I'll be uploading. You have to practice questions from study mat, and in the next session we'll have a test. 10 minutes doubt session, 10 to 15 minutes test. Then we'll move to the balance sheet part. 10 minutes doubt session, 10 minutes we'll discuss some questions from the previous exams, and 10 minutes the test. Starting half an hour will be devoted to the revision of the profit and loss, and then we'll move to the balance sheet items. Okay? Chaliye. Take care. Good night, everyone. Ashok ji.